10.1 mortgage loans. So we are looking at housing in chapter 10. So we're looking at getting and figuring out the down payment and how much would be left for the loan. So today's assignment is not hard. It's kind of like buying something on sale, or if you, for instance, bought a refrigerator somewhere and you had to pay a down payment, and then you'd have to figure out how much is left to pay. So basically, it's really, really basic today. Some of the sections, though, in Chapter 10 get a little bit harder. How do you finance the purchase of a new home? You get a loan for it. So obviously people are not probably going to have enough cash to write a check out for a house because it's expensive. The mortgage loan is just a long-term loan that you make payments on. Down payment. If you are a first-time home buyer, they'll ask you if you want to do the first-time home buyer's loan. Basically what happens is you pay a lesser down payment. It goes from 10 to 40% down payment for everybody else to a 5% down payment or something much smaller. So it depends on if you've got enough for a normal down payment or not. Otherwise, everything else is very similar. Jessica and Kirk are buying a home for $140,000. They must make a 15% down payment. What's the amount of the loan? So you multiply. If they actually want the down payment, it's going to be a two-step question. If they don't need the down payment, I'll show you how to do it in one, and we've done that already this year. So $140,000 times your down payment percentage, and you'll multiply. $21,000. To find out how much the loan amount is, you subtract the two. So when these two sign their paperwork, they're going to have to write out a check for $21,000 right off the top, and then they will figure out the rest of the $119,000 split into payments. The next thing you would have to decide with your banker or mortgage company, whichever it may be, usually you go to the bank to get a loan, and then they kind of separate it out into different mortgage companies. So one particular bank might use this mortgage company and so on. So it's not really a loan that they do the paperwork and stuff, but it's not really necessarily through them. So you would then say, okay, how much would I have to pay if I did this in 20 years? Or how much would I have to pay if I did this in 30 years? And then whatever you feel like you could handle, that's the one that you would pick. Also, you want to kind of pay attention to the interest rates too. When we built our house, the interest rate I think was 6.75%, which seems like a lot right now. Probably about 8 years in, the interest rates dropped quite a bit, and we got it down to 4.25. But that means refinancing. So you have to do the paperwork again. You have to pay for the paperwork, but it takes your percentage down 2%, and that's a lot. So it does save you money, but you kind of have to look and see, is it worth doing or not? How many years do you have left? And then basically do what works for you. So if the interest rates are kind of low, maybe you'd think about buying a house sooner than if they were higher, So keep in mind that's what you need to do. So what if they did not ask for the down payment? Here's one other way that you could do this one. But if they do ask for it, you have to do it. 140,000 times 85%. So do you remember those questions where if you bought something on sale for 25% off, we subtract it from 100 to get 75? It's just like that. So if you take 100 minus 15, you get 85. And that's where that percentage came from. So if you take 140,000 times 85%, you get exactly the same number. So it depends on the question. If you want to do it in 2 steps every single time, go for it. It doesn't really matter. You just have to make sure that you answer the questions properly. And that is all I have.